Thanks for watching this video. Now the purpose of this series is to take typical commercial real estate leases, primarily focusing on office buildings, office leasing terms and terminology used in the industry, and to just provide it in layman's terms so business executives and owners who are not in the commercial real estate industry can make wiser decisions in their negotiations for their office leases. So they can save money, get better terms, a better work environment, and retain the best employees and recruit better employees. So here we go. We're going to talk about leases. The most common kinds of leases you'll find in office buildings, starting with the most common of a multi-story, multi-tenanted office building. The most common is called a full-service lease. Now, a full-service lease has a base rent that includes a lot of the expenses, if not all of the expenses, of operating the building. It's also sometimes called a gross lease. Now, a full-service lease will still often have escalations if it's a multi-year lease. Like a 5-year lease may have a 3% increase per year that's fixed and built into the lease structure from year 1, year 2, year 3. There's this fixed increase. A full-service lease is going to include insurance on the building. It's going to include all the operating expenses such as electricity, maintenance. It's also going to include the real estate tax bill. And then, of course, there's the base rent. One full-service rental rate. And that's what you see advertised and marketed out on flyers and on services out there and so forth. So there you have that. Now, compare that to what's called a triple net lease, another very common form of lease. You find this often when a large enough tenant leases an entire building, they may do a triple net lease. Or if you lease a one-story office building or a row house that's a professional condominium row house, and you end up leasing this one unit, you'll sometimes hear a triple net lease. Now this is where there's a minimum rent that's paid. That's the base rent. But there's a separate additional rent, is what it's usually termed, what the term is in leases, additional rent for other factors that the landlord pays to operate the building and own it. That would be real estate tax bill, insurance on the property, and also the maintenance on the property. It could be to maintain the HVAC. It could be even not technically a maintenance item, but could be to run electricity in common areas, including paying towards the electricity in the parking lot for lights in the parking lot. Those are all covered under, say, maintenance. So you have these three items: insurance, maintenance, or common area maintenance is usually the terminology for it, and lastly, the real estate tax bill. So you'll have rent that's just applied to minimum rent, then you'll have an additional rent that's applied to these triple net factors, right? And combined, that's your overall total rent. There are some things that are generally missing in that kind of a lease that a tenant will then have to pay for separately directly. The landlord's not going to see this bill, and that is cleaning service is one. And then also the electric bill for the actual inside of the office space. So when I covered that the landlord may be paying electricity for common area electricity, such as lighting in a parking area or in hallways. But what about electricity to the unit you're leasing when you have individual units that are separately metered, like in row house kind of professional condominiums? Or if you have the whole building leased just to your own company and there's no other tenants, it's not multi-tenanted, but it's a single tenant lease. Well, then you have the ability to have a triple net lease where the tenant is paying the whole electricity bill inside the building for the premises that are being used. Now, that would be outside of the rental rates altogether, but it's a real cost of occupancy. So understanding these nuances in leasing is important, because often when you're looking at different spaces, you may come across alternative space options for you that they're marketing as a triple net lease or a full service lease, or even something in between, like it's a double net or single net. Without getting into too much of the nuances there, I'll cover that in a different video. Understand that the requirement to really make a wise decision comes down to one's ability to take apples and oranges and make them all oranges or all apples, and make a fair comparison across what are you getting outside of location factors and things like that. Just simply on the basic economics of it, what is the best choice? What's the biggest bang for the buck? And how can you leverage one property against the other in terms of your negotiating strategy with these various landlords? You got to know, you got to have apples and apples, oranges and oranges, and not be comparing apples and oranges, because people in the industry, the brokers, the attorneys, the commercial real estate expert attorneys for the landlords themselves, this is what they do for a living, negotiating these leases all the time. Believe me, they see through the negotiating strategies that come from a basis of naivety. Those who are not informed in the process it's pretty evident to those who are. It's important to learn how to negotiate effectively with those in the industry so you get the best end result, save the most money. And as I said in the beginning, so you can create a great working environment at a low cost and retain the best employees and recruit the best employees. Well, I hope this has been helpful to you. If so, click the like button, leave a comment down below with your thoughts or questions, and I look forward to seeing you in another video about office leasing. Thanks for watching. Bye-bye. Want to learn more about ROSSI Commercial Real Estate? Well, then watch some of these videos, and don't forget to subscribe to this YouTube channel so you'll be notified when new videos from ROSSI Commercial Real Estate are uploaded to YouTube.